this super bullish spike scenario is activated, and it will take gold to $3,100 rather quickly over the next few weeks or months. That's my main scenario. Maybe it could take until spring next year. Maybe it could happen faster. Usually, as I said, you have this rally that's building up, and at some point you get this vertical spike. At the end of that vertical spike, gold turns around and comes down back hard. So let's say we started that spike at 2,500, we're going to 3,100, and then it will also come back fast down to 2,500. So it's great for trading, and it's great if you take profits in time. If you wait too long, you might give everything back. So.
Hey guys, my name is Danny. I'm a data scientist, and you're watching Capitalcosm. Today, we've got Florian Grummes on the show. Hopefully I pronounced that right. Florian, thank you so much for coming on.
Thanks, Danny, for having me. Pleasure to be here for the first time.
Yeah, definitely. We're happy to have you here. Before we get started, guys, I'd like to remind you to hit that like and subscribe button if you haven't already and you're getting value out of this channel. But also, if you want a little bit more than what you're getting on YouTube, then be sure to consider checking out our Substack. Link to that is down below, capitalcosm.substack.com. You'll also get access to the full interview with my talk here with Florian, as well as a bunch of other stuff that you can see on the Substack once you click on the link. And with all that said, Florian, let's just dive right in. This is your maiden voyage on the show. So again, thank you for coming on. But for people who may be coming across your work for the first time, who is Florian Grummes? If you can kind of introduce yourself and kind of give us like your origin story, how you got to this point, what got you into gold and silver, precious metals, becoming an analyst on those two fronts.
Sure. Yeah. Thanks again, Danny. Well, I mean, who am I? That's a big question, obviously, that I'm still asking myself every day. But looking back, I got into finances, roughly speaking, 30 years ago. I bought my first telecom internet stock back then, and participated in the run-up towards the early 2000s. And then when I wanted to sell that stock, it was up probably 10x. My banker talked me out of that idea and told me I should keep holding. And yeah, that was a bad idea. And that was the first time where I realized like those guys basically don't really have a clue. And you really need to be able to make your own decisions, because back then I had absolutely zero clue, and I was just basically completely depending on that guy telling me to accept my idea or not, right? So that was the first thing. And then later on, a year later, I wanted to buy some gold because my grandfather basically had left a note shortly after my birth that, yeah, with a rare American gold coin, basically pushing me in that direction. I never met him 3 months after my birth, but he said that this should be the foundation of my future wealth. And got that letter and the coin handed over at some point, and that was kind of like clear for me. I must have been a teenager from that moment on that I need a vault full of gold in Switzerland at some point. So in the early 2000s, when all my friends were into tech and internet boom and everything, I had this message basically in my mind. So I went to the bank, I told them I want to buy some gold, and they looked at me like, what are you want to do with this? And they basically again talked me out of it. So back then, all the gold shops and dealers had closed in Germany because of a 20-year bear market. So it was very hard actually to just go to a place and buy gold and silver coins. You only could go maybe to a weird place at the central station, but that's obviously not the place where you want to carry your money. So yeah, I bought it on eBay, my first Krüger run back in 2001. I think I paid 200 euros. And once you have that coin in your hand, the heaviness and the beautiful light, it's the highest frequency that light can have is that of gold. So yeah, there is no turning back anymore. And down the rabbit hole I went. And of course, I started studying not only Austrian School of Economics and markets in general, but specifically with the focus on precious metals and commodities. And then I started investing in mining stocks. And yeah, along the way, I basically started my company called Midas Touch Consulting. We're an independent research and consulting company based in Munich and Dubai. We publish weekly chart books and research on gold, silver, and Bitcoin. Completely independent. We don't work with banks. We are also not touching your money. Basically, I'm just here to be your consultant and helping with the right investment decisions and timing. And yeah, basically that's it. We've been early also with the digital assets. So I'm into Bitcoin for 12 and a half years already, at a time when most gold bugs had no clue about Bitcoin or were completely refusing it. I immediately saw the opportunity there and thought that they complement each other very nicely. Digital Bitcoin and analog gold. Um, yeah, so that's basically not in a nutshell, but the background about myself.
Yeah, there it is so true what you said about holding a gold coin in your hand, even holding a silver coin. I mean, there's something instinctual about it. You feel oh, it's some sort of intrinsic value of what you're holding. It's a different feel from holding like a dollar bill or something like that.
Right.
So
So I
it's
did this, by the way, with my daughter. She had no clue about money and everything. And I showed her, do you want to have a $20 or was it a 20 euro bill? Or would you prefer a silver coin? And she obviously picked the silver coin.
mm-hmm. Yeah, yeah, I can believe that. Well, hey, let's just dive right into the to the economy and the markets. We've got a lot of stuff to talk about, Florian. We just had our first rate cut here in the United States for the first time in 4 years, a 50 basis point
Yeah.
cut. So, what are you seeing out there? What's kind of like your takeaway from what we've seen in the last, I guess, 24 hours or so? And what do you expect moving forward, given the rate cut environment that we're heading towards? It seems like they're heading towards another. Well, they hinted at another 100 basis points by the end of the year, and then another 50 next year, or something to that effect. So, what do you make of all that?
Well, I mean, I think a cut of 0.25 was definitely expected by the market. A cut of zero point 0.5 is maybe a bit more than what the market expected. And at the same time, the market has been pricing in again and again this rate cut for now more than a year, right? I mean, if you remember
Mm-hmm.
December last, I think the market had already priced in 6 rate cuts, and here we are. It took until September. So I think that the most interesting takeaway is that exactly at the same date, 18th of September in 2007, so basically less than a year before the big financial crisis, the Fed also lowered the interest rates by 0.5%.
Mm.
And we all know what followed afterwards. So I was a bit surprised here that there was a half a percentage point, but it is what it is. I think they're gonna and need to help the banking sector, making money cheaper again. But it might slowly but surely, at least right now, maybe only subconsciously, but at some point in the coming months, also more obviously, it might probably trigger, yeah, that emotional reaction. Like, is it really that bad that they have to already lower by 0.5%? And once the market really starts asking that question, I mean, there is no holding back anymore, and you usually get a big crash. So that is what we know from the past. Will it happen again? I mean, nobody knows for sure, of course. We have not seen that type of fiscal stimulus as we got here right now over the last 2, 3 years. So it could also end up completely different. But I think coming next year, you want to be more and more cautious. Right now, my expectation until the end of the year is that markets most likely overall will march higher. We had a similar situation back then in 2007. So when they cut rates, um, the markets continued until early January, making new all-time highs. So wouldn't be surprised if it's going to be a volatile ride higher for the stock markets. Maybe that will also trigger the rally in Bitcoin. And when we talk precious metals, yeah, I mean, gold had broken out above this 2,531 new all-time high from end of August. And I think that we are in a spike scenario that will take gold towards $3,000 in the next few months. And of
Yeah,
course, silver.
yeah, totally. So you did mention that the market was already kind of pricing in these rate cuts by the tune of 6 rate cuts over the course of the last year or so. With that said, do you think that we are kind of like this in this buy the rumor, sell the fact scenario? You kind of alluded to it, right? You know, you did kind of allude to 2007. We saw a 50 basis point rate cut, and then you and I both know what happened after that. Um, is that where you're kind of leaning towards?
Yes, but not immediately. So I
Mm.
think there will be some excitement in the short term. And of course, you have the year-end rally. Usually, the markets, the stock markets, I think on average over the last 96 years, S&P 500 bottomed out around the 14th of October, and then the year-end rally kicks in. So we are now 19th of September. So give it or take maybe another 4 weeks of a little bit questionable price action wouldn't be surprising. Maybe we get another pullback in the short term. Maybe the market just continues higher. Obviously, I don't really have a clue, but my expectation is that we are not going to see a crash anytime soon. This will probably then rather happen next year. And probably also given the US election, I think the interest of the Fed and the whole establishment is like to giving it a smooth ride and not to like spook the markets with any challenging situations, which might come up anyway throughout the election, right? I mean, there is enough potential for escalation in whatever kind of form. So I guess they will do everything to at least give a smooth environment, and so I don't think that the markets are right in front of a crash. I think the markets are rather still marching higher, and I wouldn't bet against it. I think that's the most important takeaway, that I have seen way too many people constantly trying to short that market, and I understand that from many perspectives and data, it seems like totally absurd, artificially driven by a few tech stocks. There is no breath in the stock market. But then again, I mean, markets always march higher than anybody can imagine, and um, I've seen way too many bears in the last 2 years. That was always an indication that this market can and probably will move higher. And that's enough, like if people are short and then they need to cover, that's enough to push prices higher. It doesn't even take another smart invention by NVIDIA. Here we are. I think seasonality is soon to be turning green. We might have a bit of a challenging few more weeks or into early November, but afterwards, unless there is some disaster around the election, I think the markets will rally into the year end, early January kind of typical pattern.
Right, and that's the markets. But what about the gold and silver market? How do you see those performing moving forward?
So, um, going back to the last few years, and especially last year in summer, we had this big cup and handle pattern in the gold market, right? Gold had been running against $2,075 again and again. It failed, I think, 3 times. We had the big pullback during 2022 when the Fed started to raise interest rates dramatically. Gold sold off, did a triple low at 1615. That was the start of that rally that still is ongoing until today. And we consolidated last year over the summer and then finally got that breakout above 2075 in last November, end of November, early December. And that basically brought the end to that huge cup and handle pattern, which gold had been working on for 13 years. And the first target out of that cup and handle pattern was $2,535. I gave that target a year ago, even more than a year ago, and we reached it beautifully at the 20th of August this year. And of course, the textbook would tell us from there we should see a pullback, testing that former resistance, which has now turned into support around 2000, let's say 2050 to 2150, like a broad range. But as you know, gold is still very strong. It keeps pushing higher. We had a few big down days over the summer, but every time it came back up on its feet, it always keeps creeping higher in the end of the day. It made new all-time high after new all-time high. So I came up in August with my updated scenario, and that was basically probably we don't see that pullback anymore, but we just go directly towards the next target. And if you take the cup and handle again, we have reached the depth of that handle, but now the next target will be the depth of that cup. And if you calculate it more or less, the cup had a depth of roughly speaking $1,000. So if you put that on the breakout level at 2075-ish, it will take us to 3,100, let's say, roughly speaking. Okay. And that is the next target. And combining that with my experience that in the last 25 years, we haven't seen any gold rally without a final spike where gold basically went up vertically over a few weeks or 2, 3 months. This probably still is missing, and this is now the main scenario that I see for the next, let's say, 3 to 8 months. That means this rally continues. We have seen $2,600 yesterday after the Fed during the press conference. And I think this super bullish spike scenario is activated, and it will take gold to $3,100 rather quickly over the next few weeks or months. That's my main scenario. Maybe it could take until spring next year. Maybe it could happen faster. Usually, as I said, you have this rally that's building up, and at some point you get this vertical spike. At the end of that vertical spike, gold turns around and comes down back hard. So let's say we started that spike at 2,500, we're going to 3,100, and then it will also come back fast down to 2,500. So it's great for trading, and it's great if you take profits in time. If you wait too long, you might give everything back. So, of course, with your physical holdings, you should not trade that at all. It's just an easy, smooth ride holding your physical metals. But if you are trading, if you do mining stocks, whatever, then you have to be careful that these vertical spike scenarios at the end of the spike end abruptly and then go in the other direction very, very quickly.
Hey guys, quick pause. I won't take too much of your time, but if you're looking to add into your gold and silver stack, please consider Miles Franklin. More specifically, email them, info@milesfranklin.com, and tell them that Capital Cosmos sent you in the subject line to unlock special pricing that you won't find on the website. In the unlikely event that you don't like the prices, you could always not buy. There's no commitment necessary, but I do recommend Miles Franklin for a number of reasons. The customer support is top notch, the prices are great, and I know the people there. Great people all around. So with all that said, let's get back to the video. Thanks, guys. Yeah, so that sounds like it's a very near-term prognosis. When you look at gold from a long-term perspective, I mean, is it just a continual, bottom left to top right move? How do you see gold from a longer-term time horizon?
Well, I've been always in the camp that gold will at least reach $5,000 and most likely also 10,000 or $9,000. At least it's hard to give these longer term price targets. Remember, I mean, we are now in an uncharted territory, right? I mean, it's you can, as I just did before, you can use the cup and handle to do some forecastings, but you can rather rely on macro and fundamental kind of numbers and data to maybe project price targets more into the future. But I think it's very clear that we are in a secular bull market since 2001. The first leg took us to 1920, and now the second leg will take us most likely much higher. I think 5,000 is very likely, maybe 10,000. Who knows? It will all depend on how much money will be printed. Don't forget, I mean, in the German Weimar Republic during the hyperinflation, the gold price went to a few $1 million, Deutschmark back then, right? So it all depends on how much they expand the money supply, basically.
Yeah, and what about silver? Will we start to see silver outperform gold as we go further into this precious metals bull market?
Yeah. So I call silver the schizophrenic diva. It always lags, it's always difficult, and once it shows up to the party, it goes completely nuts and then crushes the party. So you have to be really very patient. I don't trade silver because I think it's just too challenging and too volatile and too weird moves. But it's great to stack physically 1 ounce and 1 bar upon another, right? But it will catch up at some point. I think the next move for silver, the next target is $50 for sure. That would be the third time that we reach that number. I think nothing new. Silver is one of the very few commodities that is still trading way below its 1980 kind of price high. So There is a lot of potential, but it's gonna be a weird, crazy move. And usually silver is lagging most 90% of the time, and then suddenly in those last 10% it shows up and like goes completely nuts. And then that's where you get those this outperformance against gold, right? So from my experience, it's great if you get the timing right for these last 10% in a bull run and then silver shows up. It also is the warning signal that the bull run in the sector is coming to an end. So, of course, if you hold mining stocks, silver mining stocks for that typical kind of like final run in silver, you can see crazy, crazy moves within a very short period of time. But again, it's also a warning signal that the rally in the sector comes to an end. So I'm very bullish. Long term, yeah, I'm in the three-digit silver camp for sure. But I would assume that if we reach those $50 now, maybe in the next few months, next year, for the third time, we might see a pullback again. So we've seen $50 in 1980, then in 2011, and now that would be 2024, 2025. I would assume right now that once we get to those $50, you get the pullback, maybe back to $30, who knows, maybe just 35. And then silver will need another run up towards the $50. And it will take time, it will have to run a few times against that resistance. And once it finally breaks through, then yeah, I guess three digits, $100, maybe even $250 is possible. We all know that in the ground, you have a gold silver ratio from roughly speaking 9 to 1 or 10 to 1. And right now, this ratio is completely trading at a different level. So there is a lot of room for silver to catch up. But again, usually it more or less follows gold for a long time. And then suddenly at the last 10% of a bull run, it shows up and it's doing its own thing.
Yeah, so let's do a little thought experiment. If you had to hold one of the two, whether it be gold or silver, for the next 10 years, and you couldn't trade in or out, you couldn't sell, which one would you hold?
That's actually a good question because you have to consider quite a few things, right? It's not only maybe the price performance, um, because maybe theoretically there might be a situation where you cannot use your gold anymore, while silver is always an industrial metal. And most of the silver has been used. So it's not like gold, which is hoarded and in lots of vaults all over the world, just waiting for the right price to come to the market. So yeah, I think I would stack silver.
Stack silver. Yeah, and then well, I also want to touch back really quick on what you said about the $50 price target, or not price target, but resistance. What about the fact that on an inflation adjusted basis, you're still well off the past silver highs?
Yeah, of course. I mean, these inflation adjusted numbers and charts, I'm always a bit careful because this is not technical analysis, It's just
Mm.
like giving you an idea to where it maybe should be, but you're using inflation data from the government, which is anyway completely faked and not really helpful. The market itself is looking at price and it will respect this $50 resistance level, at least at the first time it's running there. Um, and then how do you calculate these inflation adjusted kind of price levels, right? I mean, again, we all know that the way they come up with these numbers is like you buying every year a new TV, but you don't use oil and you don't eat, right? And that's how basically the official inflation numbers are being calculated. So, but of course, you're totally right. I mean, the main point that people need to understand is that the money supply has been increased dramatically over the last since the top in 1980 over the last 44 years. Just alone since the financial crisis, the balance sheet of the ECB has been increased, I think, by 16 times, and roughly speaking, a similar number for the Federal Reserve balance sheet in the US. So things basically just based on that should be up 16 times, because there's just so much more money in the system. Uh, and as we know, gold and silver keep track of it, but they don't do this in a linear fashion. They do this in a very volatile and then overshooting kind of fashion. So at some point, the market will price that in, and not only that, but it will run much further, right? So at some point, gold might price in a balance sheet expansion maybe by 20x or 30x, and then it will come back down hard, similar to what we've seen in the top in January 1980, when gold at $890 back then was totally overvalued and way too expensive. And then it took 20 years to basically find the low. So it is interesting, kind of like to understand it. But then again, like technically speaking, you want to see and look at charts and the real numbers that the market has been trading at.
Yeah. Well, let's pivot over to the mining stocks side of gold and silver. There is some tracement that typically happens with the mining stock in relation to the gold and silver prices, but a lot of these mining stocks they've disappointed, for lack of a better term. Let's just keep it that way. How do you see the mining stocks playing out? Moving forward. Let's say GDX or SIL, those big ETFs, as well as some of the broader sector as a whole.
Right. So I think it's important to understand that the mining stocks are a very cyclical sector. It's a sector, especially the smaller juniors, developers, explorers, are extremely volatile and also very speculative form of investment. And unfortunately, if I look back, I would say 80% of the time they're either going sideways or lower. And only 20% of the time they go higher. And most of the time, within those 25%, then they go really nuts. And you can make quickly 5x, 10x if you pick the right stock and have the right timing. However, most of the time, I said they're going sideways or lower. So there is a torture over time basically happening. And if you are too early into those stocks, it's very painful. And you can lose quickly 30, 40, 50%, even though the story has not changed, even though the management is doing everything according to plan, even though they come up with good drill results, even though everything basically is okay. There's no bad news. Still, the stock can be down 30, 40, 50% simply because there's no liquidity in the sector. And then, yeah, it's slowly but surely going lower. And that's what we've seen over the last few years. On top, I think we have to understand that the vast majority of that gold rally has happened in the East, driven by the Chinese physical gold demand, and not by the Western investment demand. So until April, May, we've seen that the GLD and all the other ETF holdings actually went down. So the gold ETFs had been selling while the gold price went up because it was driven by physical demand out of China primarily, and India, and a few other Asian countries, and some central banks. So if people don't buy the GLD, why should they buy a mining stock, right? And so that's been a very difficult period, and of course also a very painful period, because if you buy a mining stock, a gold mining stock, you expect the gold price to rise and you want to have some leverage on it, and then you see gold going to 2,400, 2,500, and your mining stock keeps falling. I mean, it's of course hard to understand, and I can tell you I've seen that in the past a few times, and that's why I've been very cautious with the mining stocks over the last 2 or 3 years, because the environment was not there. Also, another point may be important to understand here in that context. I mean, if the whole market, the stock market as well, is just driven by 4 or 5 big tech stocks, and most of the value stocks have also been going sideways or lower. Yeah, again, I mean, that tells you there wasn't really a lot of liquidity, and it was not risk on. People were rather very cautious, and these rising interest rate environment was challenging. But the good news is, I think that this has changed now. We've seen with gold breaking above 2,540, we are seeing more and more of the smaller stocks picking up. You see double-digit gains here and there. You see more M&A activity in the sector, and I think it's time now for the mining stocks. I think they're getting ready now for a really nice move to catch up to gold. I cannot tell you exactly how fast it will happen, but usually, yeah, I guess we are in now for a few good months in the mining stocks. Wouldn't be surprised if they catch up until, let's say, early next year, spring of next year. And you might see actually some violent moves. So the problem then is once the sector turns, it goes so fast that you run behind the train, and the market doesn't give you any chance to get a good entry in form of a pullback or a dip, right? It's just continuously pushing forward. So that is probably right now the risk that I see in the mining stock sector, that
Yeah.
it's running you.
Yeah. So what about broadly speaking, where do you see the most opportunity right now? What sectors out there?
I think that it's time to get into the silver stocks for sure, because we talked about it already. Um, Most likely, silver will see a violent move towards $50 within the next, let's say, 3 to 8 months. And if that happens, uh, you will get a very nice leverage with your silver mining stocks. I think a leverage of 3 to 5 maybe is possible
Mm.
depending on the company. But and as I said, also you need to be positioned then for that move, because if it gains more momentum, the market will not give you any chance to get on board anymore. So I think that's for the next 3 to 8 months. I would say that's making sense. I mean, at the end of the day, most of the smaller producers, the juniors, they are all in the gold sector as well, are completely beaten down, and you can find actually really good stock prices wherever you look. I think it's crazy. It's actually more difficult to figure out which one to buy. And my approach and also my recommendation is do a comparison and look what the market is telling us. So, like, compare the prices of, let's say, last week we had that turnaround, I guess, in the mining stocks. So maybe just look at the price performance of the last 1 or 2 weeks and buy the strongest one and not the one that maybe is still lagging, because the market is telling us, the market always knows more than me and you and everybody. So I would buy the strongest performing stocks within the gold junior sector, as well as within the silver mining stocks. And then you most likely will do really well. But remember, mining stocks are not a long-term buy and hold investment.
Yeah, you're not buying Coca Cola or Delta when you're buying a mining stock. You're not going to hold it for 50 years.
At least that was not a good idea over the last 50 years.
Yeah, totally. Well, what are some of the biggest mistakes that you see gold and silver investors make, Florian? Like, what do you, is there like a pattern that you see with a lot of gold and silver investors that you, like a certain mistake or set of mistakes that you see them make?
Oh yeah. Look, I think once you go down that rabbit hole, right, and you start understanding that we're living in a paper money Ponzi scheme kind of system, and it's all fake and it's all not real, you somehow assume that the world will end tomorrow, but it's not. They always find a way to prolong it, to kick the can down the road, right? So gold bugs have the tendency to bet with everything they have on that black swan event that the whole system is crashing down and coming down. And of course, we have to be honest, the probability for it is rising because it's getting more and more unstable, right? But then again, I think as of now, they could easily buy another 5 years and just continue with that, more printing. And the threshold until the vast majority of people in a society is losing the confidence in a paper money system is actually, I think, still quite a bit away, right? I mean, it will really mean that people, the little guys who work from 9 to 5 and usually don't care about money and investing, and they just want to see their soccer game or football game and have a beer in the evening, and they really need to feel the pain that the money, the purchasing power of the currency basically is being lost so quickly that they really start to understanding in the reality of their little lives that wow, the money that I'm making is all fake, it's not working anymore. And we are not there yet. It's getting more painful for many people. It's become due to these double-digit inflation numbers that we've seen for 1, 2 years now. It's been becoming more challenging, but still, I see way too many people in the Western world being way too comfortable. And so I don't know how long it will take, but that's actually one of the big mistakes that many gold bugs constantly have the end of the world in front of them, and usually it's not happening. And even if the system somehow would break down, they would come up and change the rules, change the balance sheet rules, whatever. They would come up with a lot of weird stuff, and we've seen this over and over and over again. So there will always be some ways. And the other mistake that I see that usually gold bugs go all in on precious metals, like way too over allocated in one sector. And of course, if you have a nice rally and if you just hold the physical metals, easy, no problem, because you can sit through any pullbacks and maybe challenging situations in the price action with your physical bars and coins and bullions and stuff. But if you have mining stocks, yeah, it can get very uncomfortable at some point. And because these mining stocks can lose even 80, 90, 99% of their value. And yeah, that's something that you want to avoid, right? So I think timing is very crucial when it comes to investing in the mining stocks.
Totally. You did mention the double-digit inflation that people are being uh, hampered by. Now, with the last round of inflation that we had, a rising gold price hitting new all-time highs was sort of a precursor. Gold hit a new all-time high, and then a year later, we saw the massive rise in the inflation print here in the United States and the CPI and across the globe as well. Are we looking at a secondary wave of inflation? Is that what gold is telling us right now? As well as the fact that they've entered this rate cutting cycle as well. Should we expect more violent inflation down the road?
This is hard to tell. I mean, I see inflationary forces and deflationary forces. I mean, the main driver, I think, by the double-digit inflation have been supply chain issues, right?
Hmm.
And they're still in place, and we're seeing that globalization that the world was in for the last 40 years basically is being unwind, at least to a certain extent, with the West against the East. And this will probably intensify. So the supply chain issues and the fight for resources will probably only intensify at some point. Um, I'm not sure if gold is pricing in the second wave of inflation at the moment. I think it's more like that its price it shows that many people outside of the Western world, meaning outside of US, Canada, and Europe, have the need to diversify away from the US dollar. They want to have more gold. And that's why the Indians buying a lot. That's why the Chinese buying a lot. That's why the Russians are buying a lot. And basically, it goes in that direction of the de-dollarization. It also basically tells us that, I mean, remember that the Chinese real estate sector has been a nightmare for the last few years. And if you would be a Chinese living over there, where would you like to put your money? Huh? So I think the realization of a big country with more than 1 billion people that, wow, I cannot invest in real estate anymore. Stock market is a gamble anyway, and it's also down in China and not coming back on its feet. Let me get some physical gold. Uh, Probably is actually very simple. So you have a lot of people that just buying gold, and at the same time, you have these central bankers, which also realizing that since the invasion of Russia into Ukraine and this whole breakup of a war which is constantly intensifying and escalating, and these sanctions against Russia, nobody can trust the US dollar and the US government anymore. So something that has been in place for the last 50, 60 years is basically destroyed. The trust is gone. The Saudis doing their oil trading now, preferably in renminbi, rupees, and maybe backed or exchanging those renminbis then in the Shanghai Gold Exchange for physical gold. And they are not the only ones. We've also heard just the last few days that the Saudis have been buying actually a lot of gold. So I think that is much more of a driver. Like there is a lot of people with lots of dollars somewhere sitting in this world, outside of the United States. And they realized with the sanctions against Russia that they need to move out of the dollar. and that's happening.
Hmm.
And I think that's the main driver.
Hey, where can people find you, Florian?
So we have a website. It's called MidasTouch-consulting.com. That's where I post all my research. It's in English. Any German follower could click on the German flag, and there will be the link to the German newsletter. But the international followers can sign up for our free newsletter. It's free of charge. We have, as I said, weekly research on gold, silver, and Bitcoin, and some of the other cryptos at some point, and also commodities, and of course the mining stocks. And we also have a Telegram channel, Midas Touch Consulting, where we have a very interesting, lively exchange among investors from all over the world. Mainly, the conversation is in English, and you will get most of the latest important news before anybody else in that channel. It's unbelievable. It's really like a um, um, if a lot of good people from all over the world just work together and want to contribute to a network, right? That's what you see there in reality. Like you get a lot of good background informations and news and ideas, trading in informations. You get charts, everything. It's all for free. It's just a great group of people from all over the world helping each other in these challenging times.
Great. We'll have the links to all those down below, so be sure to check them out, guys. Also, I'd like to remind you to check out our Substack for the full version of this interview. The conversation extends out on Substack. Link to that is down below. And of course, I have to thank you so much for watching, and I'll catch you next time. Bye, y'all.
Thanks, Danny, for having me.
Definitely.
I think we've been never closer to World War III than now, which is a big concern, and which is not good. There's no diplomacy, there's only warmongers, and you can poke the Russian bear quite a few times, but at some point it will get nasty. And I don't believe that the West has a chance to win that war in Ukraine. And if it escalates, it will be very, very bad for all of us.